Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening, as we're here now on Monday, the 18th of September, 2023. Next week, the end of the week, it's hard to believe, in Chicago at least, we will have more dark hours. Daylight, in other words, will be less than dark. That's how fast the season change is now taking place. We're, a week away from the clock changes if you're in one of those states. That's about to happen. Illinois is in one of those. Spring forward, fall backward. Remember that. That's how that works. Now, this is the trifecta week. You have the Federal Reserve Wednesday, the Bank of England on Thursday, and the Bank of Japan, all with monetary policy meetings. Friday's the Bank of Japan, and each one will be important to that particular currency. But the monster in the room, the elephant, is going to be what the Fed does. The market widely, and I want to use that term, widely expects the Fed is going to do nothing. The probability of it on the CME Fed Watch page, I went and I looked at it. I wanted to be sure I was seeing it right. Looks like 99%. So is the market set up to trip? Yep. If the Fed goes a quarter point, the market is widely not expecting that. What else is the market widely expecting? They'll be looking at the dot plots. That's going to be really important. And then the tone and the wording that the Fed chair uses. I could already be Mr. Powell. Yes, we looked at everything. We think there are reasons that we can pause right here for a bit. However, if inflation continues the data and it doesn't go in the direction we want, we reserve the right, and each meeting will be a live meeting, and we may have to go back up. Blah, 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 blah. Right. Then when asked about the dot plot, and I hope somebody asks him, so he'll probably say, well, we'll have to wait and see these things change. If you'll recall, the market had widely forecast that there would be a rate cut in 2023, and he'll say, we don't see that at this point, as you can see. So the Fed was right on that. Now, the market's going to look for 75 to 100 basis point cut by the end of 2024. That's probably what I think they're going to be talking about. The market is hoping, and I can't use this enough, hoping that the pressures coming on by energy will go away. It is hoping that the strength in the employment is starting to wane, and it is. If you've looked at temporary hiring for Christmas, and I know you'll say, this is too soon. No, it isn't. If you're in the big box stores, they're already out there getting the people they want. It's the smallest numbers at this point in many, many, many years. So that is waning a little bit. We're going to get more, obviously, now numbers on jobs data throughout the rest of the year, but I think they're counting on that falling. I'm reading some stories, like in New York, which is not the center of America. But in New York, there's stories that rents have peaked out, and now the landlords are suddenly giving some concessions to get you to sign. Well, New York isn't Chicago. Chicago isn't Topeka. I can go on and on. But it's a story that maybe we're seeing that. Is real estate on fire? Well, it depends what you call it. Number one, you can't afford it, most people. Number two, there's fewer product out there for sale, so it's not going down. It's just not moving. So I watch that. And when are we going to get it? So the Fed has succeeded with the Treasury in part in pricing people out. Remember, the Treasury has been going after $1 trillion this quarter of funding. Now that brings me to the other word. What about the end of the day, the budget? Well, I think you should be jaded. They always go to the very end. You might get a few days where things are shut down. We've seen that before. That's not unusual. And then magically it comes alive because every politician has to face his constituents. He cannot tell them you're not going to get your Social Security check. The mail service can't deliver it, blah, 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 right? So the market just doesn't care. I wish I could tell you it's more than that, but it's the way it works. It will get done. There will be a budget of sorts. You know it's all going to play out. Whether McCarthy, Speaker of the House McCarthy, can make it through a test of Republicans that want to throw him out if he doesn't do what they want, I don't know. Can he get enough Democrats working with more conservative Republicans to get some bills passed? Probably. Then it's on to the Senate, and God knows what happens there. And where are we? 2 weeks away or so from the shut-in? I told you, it's always you kick the can down the road. All politicians are this way. They don't want to do it to the very end. The good news is McCarthy's already told all the Republicans, do not leave Washington this weekend. We are working through the weekend. That'll get them done. Now you're affecting them personally. Okay. In the S&P, the market continues to stay over the 18-week average, so the bias is bullish. We're about halfway of the break point. From there to there and right in here, that's about a 50% correction. As the market now does this with its thumbs, boom, it's marking time now. What do I do for the next 72 hours, roughly? That's what the market is saying to itself. When you look at the S&P, you have a pattern here where I don't know if we took out this low today. Did we do it? I didn't think we had. Let's see if I can get this done for you. Yeah, here we go. It's gonna go back. So let me get it. Yep. Takes a moment here for the radio signal to work. Okay, so the low, and we'll come right in here, the low right here was 44.94.75. Then we went up, and now we're breaking through it, and we're at 44.87. I don't have this arrow in the right place. You have a higher high and a lower low. I just recognized it and didn't see it. I did it on the other ones. I missed it on that chart, so I apologize. Higher high, lower low. No trend. A trend is when you have higher highs, higher lows, or in a downtrend, lower highs, lower lows. No trend is a lower low, higher high in some configuration. You're just waddling. And often, excuse me, that happens against the 18-day average of closes. I'm at that time of the year where all the plants outside, they're giving the last gasps of pollen, and I have allergies, and they act up on me at this time. If you take a look, you're sort of going sideways in the Bollinger Bands, and you're oversold. If you were to ask me, Ira, is there a trend here to trade? No, not on the daily chart. There's no setup. What about the NASDAQ? Identical. Higher high, lower low, sort of caught in there. So the market's gone neutral on you in front of that. What about the Dow? I'm sure I did this one right. Higher lows, higher highs. Still in an uptrend unless you take out this low. Momentum drifting and the market fighting day after day after day since back here, almost 2 weeks against the 18-day average. It tried the upper Bollinger Band, and for those of you that took my course, bingo. Stopped right at it, and market pulled right back as I teach. In the Russell, you have a higher high, lower low, and you're oversold. Now, what about embedding in this? Embedding means that these numbers go under and stay under 20 for several days in a row. Yesterday, which is today, by the way, because we're already in Tuesday trade, but we are on Monday. That's when I'm recording. So Monday's trade, both numbers were under 20, but not the day before. So you don't have an embedded reading. You got a market that's oversold. Maybe it reaches to the 1836.5 level, but that should be initially some support. In the bonds, look at how oversold you are. This is not bonds anymore. I moved today to the 10-year notes. I decided, I think we're better off with the 5 and the 10-year here. And look at how that market is oversold. No trend. Higher high, lower low. No pattern here. But the 5-year is in a downtrend. Lower highs, lower lows, big support at the lower Bollinger Band. Each time you're hitting it, you're bouncing away. Could this market accelerate down? Easily if there's a surprise 25 basis point hike. Would I still say you ever go short under a Bollinger Band? Never. No chance I'll ever say that, because 95% of the time the market trades within the bands. Why do you want to be the one guy that says, oh, it's coming out this time? Sure, it's like Vegas. They're building the casinos on you, right? You're going to be the one winner. I know you are. I bought my lottery ticket tonight, so you may not see me if I win. Higher lows, higher highs, embedded. Different story. I am very bullish the dollar until the red line closes under 79, but I have a policy that has served me well in keeping my subscribers, my accounts that ask me things, what to do, out of harm's way. Why go into a major report? Number one, you don't know if the market's discounted it. Number two, it might not come out the way you think. You're going to tell me you can stand on that train track and that bullet train's coming at you and you're going to be agile enough to get out of the way. No, you're not. The algos will go through anything you put in there like that. I've seen the surprises. I've done this over 50 years. When they happen, electronic markets, they're gone. The options are even worse because the volume just draws and they explode on you the wrong way. Just giving you what I've learned. So I try to stay away from that particular problem. In the eurocurrency, this is a market I'm much more bearish, but I'll backdoor the dollar after I see what they do. I want to be short that if you keep the embedded reading. Lose it, and I don't want to be short. Then I think you're going up in the euro and down in the dollar. In the British pound, you couldn't get me going into that. All it's done is come down. So they go up a quarter point, and they go there through. Just to give you an example. How much of that is in the marketplace? By the way, I think you can go to 120 before it's all said and done, but I don't think selling it right here to go into the Bank of England report on Friday is my cup of tea. It might be yours. Bitcoin, this morning, to my subscribers in here and Ethereum, I said, I think we're going to get up and make a run, and it was not anything like this, to the upper Bollinger Band to finish off this leg up we've begun. That's exactly what I think occurred. November Brent versus WTI. Now, we're going to have to get away from the November, so I'll probably go to December for both of these because the November Brents, I know it sounds crazy, we're in September. It stops trading very shortly. But you can see how they keep, let me bring this back. Look at how they keep narrowing in the difference between the two. This is President Biden's wonderful energy policy. He's the greatest engineer of an energy policy that no one has ever seen. You heard what I just said. Man can't engineer diddly. Doesn't know what he's doing. He and his energy secretary are incompetent. There is no other word for the two of them. They're totally incompetent. He was going to buy, rightly so, when we got under $72 energy. He wanted your votes in October. He said, we'll do that. Our policy is going to be to refill these strategic reserves. We've got to protect America. He bought nothing when it did it. They came up with the excuse, he and the energy secretary, that, they were working on the storage facility and they couldn't possibly refill it. Now, let me understand this. You've been taking oil out because Congress mandated a sale right as all this is occurring, and you didn't really have to sell it. You could say, I'm buying it and selling it in the same transaction. You can't tell me that's not the right grade for the strategic reserve. One hand does this, the other, it's called a wash trade, and you're done. Not even smart enough to do that. These two are a team. As long as you're embedded, higher prices are coming. Are we going to $100 a barrel? You know, when you go up, everybody gives you wild numbers. My first objective, I said it here, I thought we can get to 95. We are at 93.90. I'm pretty darn close. WTI is at 91. You can see they're just going along with each other. On good breaks, I still think these markets are buys until they lose the embedded reading, and they have them. Not so in heating oil. You lost the embedded reading. Watch this. So here's the heating oil. This was Friday. This is today. When this occurs, I'm looking now for price and the 18-day average to come together before you go back up and make that high up there. Does it have to work? Nothing has to work. You know that as well as I know that. But the odds are very strong. It's a high probability that it will. If you go back and you study Like here, when you lost the reading, you went there. I can show you one after the other. Here you were embedded, and you lose it. You came back. So you look for these things, and all it tells me is I think there's going to be a buying opportunity, but I think you can wait and see if it gets a bit cheaper. And last, in natural gas. Finally, we're working off the big supplies that we had of nat gas, big time. And now we're no longer 25% more gas on hand that we used to have. We're into the 6-7 percentile number, and the market's responding. I think you're building a base to move even higher over time. That's what the chart's looking to for me right now. So you put it together, you come up with game plans, and my biggest game plan, one of them, are my twice daily newsletters, and a lot of people love the morning futures video. I start recording at 5:15, and I have it ready for you typically before 6 a.m. daily. That's Central Time. The video covers, it's about 15 to 18 minutes long on average. It will cover at least 40 charts, at least. I mix on the dailies, Monday through Friday. I go daily, but then I'll throw in some weeklies to show you we want them to be in sync with each other. Those black charts are exactly what it looks like that, just what you saw there. It will stay, and I'll get it for you. Here we go. This is how the charts will look. And the reason they're that way is they're crisp, they're easy to see, and I have more lines. There's more studies on those than I show you for free. All right, I want my subscribers to have the idea. You're going to get entry and exit points. You're going to get long-term and short-term trade recommendations from me. I promise you I'm going to have losing trades. It's an absolute guarantee. I also promise you I'm going to have winning trades. Another, I wish I could say guarantee, but it will happen, all right? And I think you'll see there's a game plan. What there will be is money management. What there will be is, if you're a chartist, things that start making sense to you. What do I mean by that? You'll say, oh, wow, look at how he's playing moving averages. Look at how he's using momentum. And I'll draw chart patterns at times. So I get you involved. Try it. The whole thing is the price of a Starbucks coffee for 22 days to give it a trial, and you're not bound to anything. You can quit at any point you want. How do you do it? Move your cursor to the top here and read about it, okay? See what I do. You can go to our website, iraepstein.com. Under the word research, it's all laid out and explained there. But I think you'll find a game plan, logic behind it, years of charting experience, decades, and I do teach charting, and I think you'll get an idea that I really explain everything. I'm Ira Epstein. Thanks for listening. See you tomorrow.